Your trading journal is lying to you, not because you're writing lies in it, because of what you're leaving out. Most traders either don't keep a journal at all, or they keep one that records everything, except the thing that actually matters. Today I'm going to show you the difference because this one habit, done correctly, taught me more than every course and every book I've ever bought combined. Let's start with why most journals fail. The typical trading journal looks like this: date.pair, entry price.exit price. Profit or loss. Maybe a screenshot. That's an accounting ledger, not a journal. It records what happened to your money, but it captures nothing about why it happened, and the why is the only part you can actually improve. Here's what I mean. 2 trades can look identical in that ledger. Same pair, same direction, same profit, but one of them was a planned entry at an untested level, executed exactly by your rules, and the other one was a FOMO chase you jumped into because you saw a big green candle and couldn't stand watching it leave without you. In your ledger, they look the same. In reality, one of them is a good trade, and one of them is a ticking bomb, because the behavior behind it will eventually blow up your account, even if this particular instance happened to make money. That's the core problem. Your ledger measures outcomes. Your improvement comes from measuring behavior, and outcomes and behavior can point in opposite directions for a long time before the truth catches up. A profitable bad habit is the most expensive thing a trader can own, because every win it produces makes the habit stronger, and the eventual bill gets bigger. So here's what a journal that actually works needs to capture for every single trade, and none of this takes more than 2 minutes per entry. First, the setup in one sentence, written before you enter, not after. What exactly are you seeing that justifies this trade? Untested level, swing failure, VWAP alignment, session timing, whatever your actual criteria are. If you can't write that sentence clearly before entering, you don't have a setup, you have an urge. Just the act of having to write it filters out a shocking number of garbage trades. I'd estimate that this single habit, writing the thesis before the entry, eliminated 1/3 of my losing trades because those trades never happened at all. Second, your emotional state rated honestly before the trade. 1 to 5. Calm and neutral, or tilted, tired, angry, euphoric after a big win, desperate after a loss. This feels stupid the first week you do it. Then you look back after 50 trades and you see the pattern with your own eyes. Your worst trades cluster on the days you rated yourself tilted, and your best execution happens when you rated yourself calm. You stop needing to believe me or Mark Douglas about psychology at that point, because your own data is telling you the same thing. Third, did you follow your plan? Yes or no? Not. Did you make money? Did you follow the plan you wrote in that first sentence? This is the single most important column in the entire journal. A losing trade where you followed your plan is a good trade, it's just a statistical outcome. The cost of doing business. A winning trade where you broke your plan is a bad trade. Wearing a costume and marking it honestly as a plan violation is what keeps that win from teaching you the wrong lesson. Fourth, if you broke the plan, what exactly did you do and what were you feeling when you did it? Moved the stop, sized up mid-trade, entered early before confirmation, exited early out of fear, held past invalidation out of hope. Name the specific behavior, because you can't fix a vague problem, but you can absolutely fix I moved my stop on 4 of my last 10 trades, always after being down 2 trades on the day. That last part is where the journal becomes a weapon. After 30 to 50 trades logged this way, you stop having opinions about your trading, and you start having data, and the data will surprise you. It surprised me. When I did this exercise properly for the first time, I found out that my actual win rate on trades where I followed my plan was meaningfully higher than my overall win rate. My system wasn't the problem. The version of me that showed up on tilted days was the problem. I also found out that almost all of my plan violations happened in the afternoon after I'd already taken losses in the morning session. That single insight led to a simple rule: 2 losses in a day, and I'm done trading until tomorrow. That one rule, which came directly out of the journal data, probably saved my account. Let's talk about the review process, because logging without reviewing is just diary writing. Once a week, same day, fixed time, you sit down with the journal for 30 minutes. You're looking for 3 things. 1. Patterns in your plan violations, what specific behavior keeps repeating, and what conditions trigger it. Time of day, after losses, specific market conditions, specific emotional states. 2. Whether your setups are actually performing, is the win rate and average risk to reward on plan following trades acceptable over a growing sample, or does the strategy itself need work? 3. One specific thing to focus on for the next week. not 5 things. 1. This week I do not move stops, period. Narrow focus actually changes behavior. A list of 10 improvements changes nothing. Notice what this structure does. It separates strategy problems from execution problems. Most traders can't tell these apart, so they respond to every losing streak by changing their strategy, which resets their sample size to 0 and guarantees they never collect enough data to know anything. If your plan following trades are performing fine and your losses come from violations, your strategy doesn't need to change, your behavior does. If your plan following trades are losing over a real sample, then and only then does the strategy itself deserve scrutiny. The journal is the only tool that can tell you which situation you're actually in. A few practical details because the format matters less than people think, but a couple things do matter. Use whatever is frictionless for you, a spreadsheet, a notebook, a notes app. The best journal format is the one you'll actually fill in within 5 minutes of closing the trade, while the memory and the feeling are still real. If you batch it at the end of the week, your brain will have already rewritten the story of every trade to make you look better. That's not a character flaw, it's just how memory works, which is exactly why the journal has to be written in the moment. Screenshot the charted entry with your levels marked, not for aesthetics. Because 6 weeks later, when you review, the chart context tells you instantly whether that untested level you wrote about was real or whether you were seeing what you wanted to see. Your past self will try to sell your future self a clean story. The screenshot keeps both of you honest. And keep the account balance out of your face while journaling. You're reviewing decisions, not money. The moment the review becomes about the P&L number, your ego enters the room and the honesty leaves it. One more thing, and this connects everything from the last few videos. The journal is where all the concepts stop being concepts. Probabilistic thinking stops being a nice idea from a book and becomes a visible property of your own data. You can literally see that good setups lose sometimes and bad behavior wins sometimes over enough log trades. Discipline stops being an abstract virtue and becomes a number, the percentage of trades where you followed your plan this month versus last month. Progress in trading is mostly invisible day to day, and the journal is the only place it shows up early enough to keep you going. Let me also walk you through what the first month of this actually feels like, because knowing what to expect is the difference between sticking with it and quitting after week 1. Week 1 feels pointless. You're writing down things that seem obvious, rating emotions that feel arbitrary, and nothing useful is coming out of it yet. This is normal. A journal with 5 entries has no patterns to show you, the same way a backtest with 5 trades tells you nothing. Push through on pure discipline this week. The payoff isn't here yet. Week 2, the first uncomfortable moment usually shows up. You'll have a trade where you have to write no in the followed plan column and then describe exactly what you did instead. Writing, I moved my stop because I didn't want to take the loss yet, in your own handwriting, about your own trade, hits different than reading about the concept in a book. Some traders quit journaling right here, and they usually tell themselves it's because they're too busy. It's not because they're busy, it's because the journal started working. Week 3 and 4, patterns begin to surface. Maybe you notice all your tilted ratings happen on Mondays. Maybe you see that you've never once violated your plan on the first trade of the day and violated it constantly on the 3rd and 4th. Maybe your early exits cluster specifically around trades that went into profit quickly, that fast profit triggers a fear of giving it back, and you cut winners that your plan said to hold. These are the insights that no course can sell you, because they're about your specific nervous system interacting with your specific strategy. Somewhere around trade 30 to 50, the journal quietly changes its job. It stops being a mirror that shows you your problems and starts being a filter that prevents them. Because now, in the moment, live, with a position open and price moving against you, a new thought shows up alongside the old urge to move the stop. The thought is, I'm going to have to write this down. That tiny bit of accountability, knowing the violation gets recorded either way, is often enough friction to stop the violation from happening at all. You're no longer just trading against the market. You're trading in front of a witness, and the witness is you. Next week, reading this entry. There's one trap in journaling worth warning you about because I fell into it. Don't turn the journal into a punishment device. If every review session becomes a session of beating yourself up over violations, your brain will start avoiding the journal the same way it avoids any source of pain, and you'll find very reasonable sounding excuses to skip entries. The tone that works is the tone of a scientist, not a judge. A violation is a data point, not a verdict. You're not logging your failures, you're mapping the specific conditions under which your discipline breaks, so you can engineer around them. A trader who knows exactly when and why their discipline fails is ahead of 90% of the market, including plenty of people with better win rates. And one last practical note on sample size, because it ties into everything we covered in the backtesting video. Resist the urge to draw conclusions from 10 trades. 10 trades of journal data is exactly as unreliable as a 10-trade backtest. The emotional patterns need 30 to 50 entries before they're signal instead of noise, and the strategy performance numbers need even more. The journal rewards patience twice, once in the discipline of keeping it, and again in the discipline of not overreading it too early. So here's the actual takeaway. Starting with your very next trade, log 4 things. The setup thesis in one sentence, written before entry. Your emotional state, 1 to 5. Honestly, whether you followed your plan, yes or no, and if not, the specific behavior and the feeling behind it. 2 minutes per trade. Review for 30 minutes once a week and pick one single behavior to fix for the following week. Do that for 30 trades and you will know more true things about your own trading than most traders learn in years, because you'll be looking at evidence instead of memory. Next video, I'm going to take real journal patterns, the most common violation clusters I see, and break down the specific psychological mechanism behind each one and what actually fixes it. Until then, answer this honestly. If I asked you right now what percentage of your last 20 trades followed your written plan, could you give me a real number or would you be guessing? If you're guessing, that's not a criticism, it's just where you are, and the journal is how you stop guessing.